Hello, Michael Lapede here. Welcome back to our Business Tips. I'm going to talk to you a bit today about cash flow metrics that you can track in your business. What are some of the business metrics for cash flow that you can track? Well, first of all, the very first one is liquidity. Determining the business ability to meet its short-term financial obligations. So how liquid are you with cash, accounts receivable, things that can quickly be sold off to get cash to pay the debts if you need. That's liquidity. Second one is internal rate of return, determining the profitability of potential investments. So if you're using investments in your company for excess cash flow, you want to have a rate of return and tracking that rate of return. It's a very good metric to track, and that would be the same for personal, obviously. Another one is net present value, analyzing the profitability of investment by comparing the present value of cash flows and the current value of cash outflows over that specific period of time, that present value coming in, going out. And cash flow per share is another good one that you can track too as well, especially if you have people that are investing in your companies, buying shares. This is very important. This is also a way to look at after-tax earning, which is an amount that's calculated from taking the cash from the operations, and then we just divide it by the number of outstanding shares, and that's how we see cash flow per share. Another one is cash conversion ratio, measure of how well a company converts its income into cash, right? Calculated by dividing operating cash flow by net income. That's another one, cash conversion ratio. Another one is funding gap, is the money needed to operate the business and may include activities for future development, so future what-if scenarios, future things that you might need, hiring staff, getting a loan, acquiring a new location, things like that, right? So you'd include those things. And we would look at what is included and that are not financed with equity, debt, or cash currently. So what is that funding gap of what you have now available versus what you will need? It's another cash flow metric to look at because, again, you're looking ahead. And the last one I'll give you is capital expenditures, money that is spent to maintain, buy, or improve the business fixed assets. Notice I said buy, maintain, or improve the fixed assets because a lot of time we look, well, we're buying this vehicle, it's this. If you're buying a used vehicle or used equipment, you might maintain them. What is the maintenance cost of those, right? So a lot of times people forget when they're looking at the capital expenditures, buying assets, fixed assets, of what the cost to maintain those assets is. You have to project that into your cash flow as well. Now, there are a lot of other ones too. These are some main ones that you should look at. If you got any questions, we'd love to hear from you. Post in the comments below, and we'll look forward to seeing you in the next video.